Arbitrage is as old as the Bible. In this educational episode, I'm going to address the question, what is the infinite banking concept? And this term is actually synonymous with bank on yourself, be your own banker, a bank of you. But when I explain this to you, you're going to understand a good way to go, a better way, and what I know without question is the best way to employ this concept in your life. So I'm Doug Andrew, and I've been doing this for 46 years, helping people optimize their financial assets, minimize unnecessary taxes, and prepare for a retirement where they do not outlive their money. And this concept is very powerful. The actual term infinite banking, I believe we should credit to Nelson Nash. I know him, and this is the term that he would use. Pamela Yellen is also an author, and she calls it bank on yourself. I have been using the term be your own banker for 45 years. And they're sort of synonymous terms. So let's talk about the basics of how money works first, and then segue into how this infinite banking concept can be a benefit for the way that you use your money for living, for retirement, for buying a car or anything you want to do. And if you run a business, why this is one of the best ways to manage your working capital. So let's go back to an example in the New Testament in the Bible. Now, many people have heard the parable of the talents. That is actually recorded in the Gospel of St. Matthew, chapter 25. But a similar parable is in Luke 19, the parable of the pounds. And they are basically the same concept. But in the parable of the talents, which is most recited, we have this master that has 3 servants, and he gives unto one of them 5 talents, and another 2, and another 1. And he goes away for a little while on a trip or whatever, and he comes back and he basically says, so how did you do? What did you do with the talents I gave you? And the one with 5 did what? Doubled it to 10. Well done, thou good and faithful servant. You've been faithful over 5, now you have 10, and he was rewarded. Now, how did the one with 2 do? Oh, I doubled it to 4. Oh, well done, thou good and faithful servant. So rewarded there. But the one with 1, what did he do? He was afraid. He knew that his master sort of reaped where he did not sow. He was an austere man. And he said, I wanted to make sure that I had it for you, so I hid it in a napkin. I buried it. And here it is. And you know, some of the harshest words in Scripture were spoken to that servant, thou wicked and slothful servant. I'm going to take it away from you and give it to the one that has 10. And sometimes people don't understand that. What? He was trying to save what he had. Well, the lesson was that the one with 1 buried the talent, didn't go out in motion and multiply that talent. He just wanted to preserve it. And some people are like that with natural talents. If you do not multiply your talent in music or in speaking or in software engineering, whatever you do, if you don't multiply it, it's going to wither up and die. So there's a lot of messages to that parable that can talk about our actual talents, but back then, a talent was a form of monetary measure. It was money. And so it also deals with money. You need to put it to work instead of just putting it in your mattress or, heaven forbid, even in a bank earning a measly 1% if it's a long-term goal. So let's segue into what this means with money in this bank on yourself or infinite banking concept. And I want to explain to you how money really works. So there are 4 things you can do with money. You can spend it, you can lend it, you can own with it, you can give it away, okay? Now, what I've taught my audiences for years and in my various books is I actually own and I loan on the same money. So simply put, if I own a piece of real estate, I am owning a home or a rental property, and I own it, but I also take the equity and I keep it separated over into my favorite vehicle, which is a max funded indexed universal life insurance contract or a portfolio of those, because I know where I can average between 8 to 10% compound interest tax free. And if I take out mortgages on the property, let's say at even 6% interest, and lately I've been paying way less than that, but at 6% tax deductible interest, it's a net cost of 4% in my 33% combined federal and state tax bracket. So every million that I borrow to own a piece of property, I'm paying a net of $40,000 a year of interest if I'm borrowing at a gross rate that's tax deductible of 6%. Recently, I borrowed money for as little as 3%. 3% is the gross rate. If it's tax deductible in a 33% bracket, it's not 3, it's 2. So every million, I'm only paying $20,000. Over here, I have the actual cash that I could have paid in a huge down payment, or I could have paid off the property, but the property is going to go up or down in value regardless of whether it's mortgaged to the hilt or free and clear. What I want to do is earn 100% or 200% more than the cost of the funds, because this is what banks do. This is what credit unions do. This is what insurance companies do. This is the parable of the talents. Because in that parable, you should have taken your money and put it in the bank with usury and earned interest. Now, when you put your money in a bank, they're paying you interest, right? Now, I'll admit it's pretty pathetic, maybe 1 or 2 or 3%, but why are they paying you interest? Are they just some benevolent institution? No, your money's not sitting in a vault. They are loaning that back out again at 5, 6, or 7%. So if they pay you 3 and they loan it back out and invest it at 6, how much more is 6 than 3? It's 100% more. It's twice as much. On $1 million, they pay $30,000 of interest to you, and they make $60,000. $60,000 is 100% more than $30,000. So let's connect the dots. If I'm borrowing, let's say on $1 million, and I borrow at 6%, a net cost of 4% after the tax deduction, that's $40,000 a year I pay in interest. That's actually my friend, not my foe. I pay $40,000, but on that million, I have it over here earning 8% in my indexed universal life, and I've averaged 8% without even using the indexing strategies. How much more is 80,000 than 40,000? It's twice as much. It's 100% more. Would you hire an employee for 40,000 that made you an extra 80,000? That's 100% return on employment cost. Would you buy a widget machine for 40,000 that made you an extra 80,000? That's 100% return on equipment cost. This is just business. This is how money works. This is how banks operate. Banks thrive. Why? Because their greatest asset is their liabilities. If they stop paying interest, if they stop borrowing OPM, other people's money, they would wither up and die. They borrow, their liability is their greatest asset. They pay interest to make higher interest. That's called arbitrage. So when you're using this for yourself, inside of an insurance contract like I do, you can use whole life insurance, and it's okay because most whole life policies were designed for accumulation of cash value and for death benefit. Unfortunately, most whole life policies do not perform optimally for tax-free income. If you were to accumulate money inside the whole life insurance policy, can you take money out? Income? Yes. But you'd be hard-pressed to have a payout of much more than 4 or 5%. The reason why I like universal life is because I can take a payout of 10%. How much more is 10 than 5? 100% more income. If a whole life policy that has $1 million of cash value could generate $50,000 a year, which most don't even come close to that even, but let's say they do. If it generates $50,000 a year, I can have $1 million generate $100,000 a year. And so you want to use the bank on yourself concept for your business, for managing real estate, but in retirement, when I go in to access money, I can settle just for 8%. On $1 million, that's 80,000. But if I borrow my income out, it's tax-free because loan proceeds are not deemed earned passive or portfolio income. Those are the only 3 types of income people pay income tax on in America. If I borrow it out, the insurance company will charge me 5%, let's say, but they'll credit me 8, 9, 10%. I've averaged 10.07 for the last 25 years. But in 2017, many of our clients borrowed out at 5% and earned 16% that year. Some earned 25%. You borrow out at 5 and you earn 25 on the money while you're using it for something else. Did you catch that? In other words, we have clients who borrowed $1 million to acquire a new apartment complex. They're being charged $50,000 of interest on their money, but they don't have to write out a check for that because it's deducted from the $250,000 they earned that year on their indexed universal life policy. 250 minus 50 is a net of 200,000 or 20%. There is not a whole life insurance policy around that can do that and protect you, that if the economy went down that you wouldn't lose, because then you'd be using a variable whole life insurance policy. I don't want to lose when the market goes down, but I want to make money when it goes up. And that's why I've earned average returns of slightly over 10%. If I borrow my money out at 5 and I earn 10, it's the same concept. It's 100% more than the cost of the funds. This has allowed people to be able to have payouts of 10% out of $1 million nest egg. Every $1 million that I could accumulate for my clients in their indexed universal life policies, I knew predictably could generate $80,000 of income, but by using this bank on yourself arbitrage concept, we can tweak it to $100,000 of tax-free income into perpetuity. And that's the magic behind infinite banking using the right products. So how can you learn more about how to implement these strategies using the best vehicle, indexed universal life? I have written my 11th book called The Laser Fund. It's actually 2 books in one. This book is about 200 pages, comprised of 14 chapters with all kinds of charts and graphs and explanations of how this works if you're a left brain learner. If you're a right brain learner, you learn by stories and examples. You read this book, you flip it over, and it's 100 pages, 12 chapters with 62 actual chicken soup for the financial soul stories of how this works. If you want to use your whole brain, the right and left lobe, read both books. If you would like a copy of this book, I'll tell you what, I'll buy the book. You just pay $5.95 shipping and handling, and I'll fire one out to you. Go to laserfund.com, and there's other options there if you like to learn by listening or watching. There's video and audio forms of this education also.